So we are Anjarwalla and Khanna. We are considered the leading law firm in Kenya. We have more than 90 lawyers, so also one of the largest corporate law firms. We've been in existence since 1953, started off in Mombasa and then came into Nairobi in the year 2000 and have grown tremendously since we came to Nairobi. A lot of our practice is we are a full law firm, corporate law firm. So we have litigation as a department, we have corporate as a department, we have real estate and finance, we have tax, and we have projects. We're also the founding members of ALN, which is the Africa Legal Network, and through that we have a presence in 16 countries, which covers a lot of Africa. Recently, we've taken on Francophone Africa with 4 new members early this year. And due to that, a lot of our focus is on regional and cross-border work. We've actually been the leading law firm in Africa 4 times now. Hence my assertion that we are considered a leading law firm. But we started off as a corporate outfit, actually doing more corporate law, and that entails a lot of mergers and acquisitions and a lot in the capital markets sector. So in the capital markets in particular, we help our clients, either they are buying a company that's listed on the stock exchange or exiting a company listed on the stock exchange. We've helped with listing, we've helped with cross-listing, and even just general compliance. We've also helped with licensed entities, so investment bankers, stock brokers, fund managers, and the like, who are also registered or rather licensed by the Capital Markets Authority. I personally sit on a Capital Markets Committee that handles legal matters, and one of my partners sits on the Capital Markets Committee on tax issues. So other than the legal work that we do with clients, we are actually quite committed to ensure that there is growth in the capital market sector, but by ensuring that there is proper legislation, there's enough products in the market that can expand our capital markets as it is right now. And that supports the vision of the Capital Markets Authority, which is to expand the capital markets in Kenya and also to achieve Nairobi as an international financial hub. Yeah. We feel that the market has been subdued in as far as there have been no new listings onto the market. But quite surprisingly, in just the last 1 year, we have easily done probably around 7 to 10 capital markets deals. For example, I handled the TransCentury transaction where Kuramo bought a 20% stake. That had to do with 2 capital markets entities, both TransCentury and East African Cables, that is a subsidiary of TransCentury. Yeah? We also handled the exit of DG and Propaco from I&M Bank. I also handled the sale of Habib Bank by Diamond Trust, which is also a listed entity. So whereas there's been no new listings on the market, there's actually been quite a bit of activity relating to listed entities. So in that way, then our capital markets work has not reduced. My view is that Nairobi has been, Kenya has been a good attraction for foreign direct investment, even into our capital markets. Actually, foreign investors have a big play on our capital markets, even on just normal trading, but even on the transactions themselves. So the transactions that I've mentioned, all of them have a foreign investor in play. So whether it was Kuramo is an international fund coming into the country. DG and Propaco were selling to CDC, which is also a foreign investor into the country. In the Diamond Trust transaction, Habib Bank actually exchanged their assets for more shares in Diamond Trust. So in essence, they kept their investment in the country, even though they were selling off the branch. And that speaks a lot in terms of confidence, in terms of keeping their money in the country. Kenya has been lucky because with the problems that have been happening down south in South Africa, which has been a competitor for FDI with Kenya, the devaluing of in the Nigeria currency and the Nigeria economy and what has happened there. Egypt or Cairo is the other competitor for attention. So in that way, East Africa, also having one of the fastest growing economies in Africa is actually the East African countries. If you count Rwanda, Uganda, Tanzania, and Kenya. So to that extent, I think Kenya has still been doing a lot of foreign direct investment. We've, of course, in the last few months, seen it quieten down considerably because of the election. So that is what has affected the capital market, so the whole political climate. But that's more recent. Actually, up to the election, we were still quite busy with transactions. I think only when the decision of the Supreme Court and the uncertainty that came out of it have we really now seen a considerable slowdown. We have actually seen quite a number of big transactions where the clients have said, we are willing to go ahead, but we need to wait. We need to wait, yes. Setting aside the political situation, actually my own personal view is if we could do the election and get over the election, even the election period will be a booster into growing our market, because it will demonstrate that we were able to go through the challenge with not as much casualty as you'd expect. There's been, it's not been good, but not as bad as you would be able to, you could expect. So if we would go through this election period, I'm actually quite optimistic about the growth. Like I said, East Africa is one of the fastest growing regions still. There are very few countries now that can be able to post above 5% growth. If you think of Ethiopia, in the wider Eastern Africa, if you think of Rwanda, even Tanzania with its challenges is still having a growth of above 3%. So with that, I think it's a good opportunity for capital markets to expand. Also, there's been a big push by the Capital Markets Authority, the Treasury, and indeed government to increase the number of products that are available. So with the Sukuk, as an example, also some of the other products that the capital markets is pushing, they are all geared towards giving a larger offering for capital markets. Well, I think we don't have an option. People have chosen arbitration because of the challenges we have experienced historically in our court systems, whether it be cost, time, and indeed corruption. And so in most of our agreements, actually almost 100% of our agreements, arbitration is the option. I think the challenge with embracing it in this market is because of a lot of foreign investors, they actually do not rely on Kenyan arbitration. So a lot of the times the documentation we do are based on English law and English law arbitration or dispute resolution mechanisms. We have seen an increase, and indeed sometimes we advise our clients because English law arbitration is also very expensive for the parties, and whether they can use alternative jurisdictions. So still have English arbitration, but probably use Mauritius as a closer destination, cheaper, whether counsel costs or indeed the whole arbitration costs. But to answer your question, the main challenge with Kenya is the fact that we have not even now been able to create a viable arbitration center and system that can be used. There have been some attempts by the LSK to come up with an arbitration center in Kenya, but that has not borne enough fruit yet. Yeah.